And here to tell us about what could become the world's next major nickel sulfide mine is Darren Gordon. Darren brings nearly 3 decades of experience financing and developing resource projects, including more than 15 years operating in Brazil. Please welcome the CEO of Centaurus, Darren Gordon.
Hello everyone, great pleasure to be back here again and to present the progress that Centaurus has made over the last 12 months. It has been a very exciting time and as you would know, the volatility in nickel has been a little bit challenging for some, but we feel like we're in a very, very good position now, and this will be the next sulfide nickel mine that gets developed. You've seen a few of those over your last couple of days. So today we'll talk about Jaguar, nickel sulfide project in the northern part of Brazil. It has enormous scale. It's at 1.2 million tonnes of contained nickel metal. There's not too many of those around. We'll talk about that size and scale a little bit. What we've done is we've had economic studies to show that we've got a 15-year project life just from the open pit mineralisation before we look at anything in the underground. We've made enormous progress with our permitting over the last 12 months. We've had our key environmental licences granted. We've had the mining lease granted, putting us in a position where once we get funded, we are ready to build this project. And hopefully that's only a few months away from making an investment decision, and I'll talk around some of the funding work that's actually going on. Earlier this year, we were able to complete an offtake agreement with Glencore for about 1/3 of the production coming from the project. And that has, I guess, shone a bit of a light back on nickel, shone a bit of a light back on Brazil and our project, where, you know, with the way that the supply-demand balance had been, where the sentiment had been in the sector, there's probably a few eyeballs going off into other commodities, and we've been able to bring that back a little bit in the last 6 months, and that's fantastic. And I'll talk to the market in a short moment. We're doing the debt funding process. That's going extremely well, working through with what we need to do, but we've seen very good proposals in front of us that will go a long way towards funding the capital cost of Jaguar. So let's just talk about the market briefly. I think, a lot of the conversations have been around the supply side. We know that Indonesia is dominating the market now. They do have about 65% of the market. And it's really their controls that have actually put the nickel price back in the spotlight and shown that if you tighten up that supply side, that you're going to have price reaction. On the other side of that, you've got a commodity that is still in high demand. Compound annual growth rates pushing out over the next 5 years around 6%. Some of that's coming from stainless steel. That market is still very deep. There's still probably 70% of the nickel market going into the stainless steel sector. Still got very much a growing battery sector, with nickel chemistry still being a key part of that environment. So at 8.7% expected over the next 5 years, that is still an exceptional growth pattern and a demand momentum for a commodity, and Jaguar and the nickel that we will produce from Jaguar is ready to feed into that market. Now, importantly, you've got to be cost competitive. I'll show you that we can be doing that. But right now, we've seen that supply response. And start of the year, Indonesia put controls on the mining quotas for their ore, had some price impact straight away. Obviously, then all the things that happened with the Strait of Hormuz and what was going on in Iran had tightened things up. Supply of sulfur and then ultimately sulfuric acid is putting cost pressure on the HPAL producers in Indonesia, and so those costs are just going up and up. I'll talk to the impact of that in a moment. The other side of it is the royalties. So the government of Indonesia really gets most of its revenue to help keep its fiscal budget in check from the royalties that come out of all of its commodities, not just nickel, and we've seen that they've done a lot of work to put the minimum floor price into the price of ore of nickel in those countries, and that has actually been causing costs to push higher and higher. And this is what's caused nickel to go from $15,000 a tonne, pushed as high as $19,000 a tonne. It has drifted back a little bit, but I think right now you're just seeing this wave and this cycle through of metal. I think longer term the costs in Indonesia are going to be higher, the environmental conditions are going to be higher, the need for that government to close the fiscal gap that's been created there is going to mean that there will be higher prices for all of their commodities. Just looking specifically at the sulphur impact, when the strait got shut, that sulphur became restricted. The prices have been pushed up quite dramatically. Conservatively, it's probably $700 a tonne now. I see some numbers that are even higher than that again. But that's caused the cost of a HPAL production base to go out with 40% of that cost coming from the sulphuric acid. That's not changing anytime soon. I think the supply of sulphur may continue to open up, but countries and companies will now look at their supply chains a lot more closely. They will put more emphasis on making sure that they have the supply of those key ingredients like sulphur and sulphuric acid. And so I don't expect that the cost of those inputs are going to go down too dramatically, too quickly. And that's going to leave, in our situation, nickel being priced quite well. Probably the biggest overlay to that, though, of what's holding it back right now is that inventories are still high. So we've had 2 or 3 years of oversupply coming out of Indonesia. That's caused inventories to build up over time. And I think that's part of the reason now that you're seeing it hasn't actually pushed through even higher than that $19,000 a tonne. I think once those inventories start to get consumed, you will see nickel continue to move higher, and that's putting Centaurus and projects like Jaguar in the spotlight where we can be cost competitive with Indonesia and really deliver excellent returns for shareholders as they look at the project. So you see, I guess, on the right-hand side here, the grey bars are the lateritic producers, principally in Indonesia. As you apply that sulphur cost and other costs in there, they're pushing out to the right. The green, which is the sulphide producers, they sort of, by natural default, are moving to the left. And that red circle there is about where Centaurus will be from a cost point of view. And I'll talk to that some more as we go through the presentation. But what it really is showing that we are going to be cost competitive in any part of the price cycle. And I think that that's key for us and for you guys looking at investment in nickel, is looking at where you can position yourself from a cost point of view and ensure that you can be competitive with the majority of the market, which is out of Indonesia. So enough of the market for now. Just looking at Brazil now and the project more specifically. Brazil is a fantastic place to operate. It's a very big country. Probably the biggest attraction right now is the fact that their grid power is coming from renewable sources, principally hydro. Gives us a very clean footprint, but also gives us very low cost power. So we're talking in the order of 4 cents a kilowatt hour for our power, which makes our operating costs extremely competitive. And you'll hear me talk about this operating cost quite regularly. And I do want to emphasise that that is one of the key advantages to Centaurus, but it's also a key advantage to anyone operating in Brazil. If you can access this grid power at that sort of low cost, it's naturally going to make your project cost competitive. And you see anything that's got size and scale in Brazil is generally in the bottom quartile of cost, no matter what commodity it is. And Centaurus will be exactly the same when it comes into production, being at the bottom end of the cost curve. The other side of it is up in the Amazon, where we're located in the northern part of Brazil. We are able to avail ourselves of a 15% tax rate. Again, bottom line, post-tax dollars, that's going to be extremely important to us. That is about encouraging investment back into that region, and we're all for that. We think that this is a fantastic opportunity for us to be able to deploy a very good project with size and scale and longevity, and it's going to do amazing things for the communities where we're located. The start of this year, we made some moves to appoint a project director. Centre of screen there, Tiago Costa, joined us in April. He is a fantastic addition to the team, who is a guy who builds projects. So right now, we've been an exploration company, we've done feasibility studies, but as you go into the build mode, you need to have someone who has actually built projects. So Tiago's got a resume where he's probably built 6 or 7 projects over his career. The latest one, and the one that's probably most important to us, is the Aero Copper. So bottom left there, Boa Esperanza, now called the Tucumã project, is about 40 kilometres from where Jaguar is located. That is a 4 million tonne per annum copper flotation circuit. We are looking to build a 3.5 million tonne nickel flotation circuit. Same environment, same conditions, same suppliers. He's been there, done it before. He built that for about $350 million and did that in 22 months. So to have picked up someone like Tiago, who can now basically rinse and repeat, go and build that project, anything he didn't quite get right last time, rectify it this time, is a huge coup for us. And we feel very comfortable with the team that he is now building, guys that have worked with him before that are getting in and building this project. The area here in the Carajás really is prolific. Some of the biggest mines in the world. We hosted some investors there a couple of weeks ago. We flew over the Carajás. Some of those mines, until you see them, you really don't quite comprehend how big they are. But Salobo, biggest copper project in Brazil, Vale owns it. They're about 36 million tonnes a year, producing about 250,000 tonnes of copper a year and about 400,000 ounces of gold. Centre of screen, S11D, biggest, highest grade iron ore mine in the world, doing about 90 million tonnes of 65% iron ore. All the infrastructure in the region to be successful at a mining project is here. Airstrip, we fly a 737 jet in at Parapebas. Rail line that's taking product out to the coast, high voltage power, water. But importantly, you've got a labour base. Vale's been in this region for 40 years. It's got a lot of people there. It's trained a lot of people. There's universities there. So you've got 2nd, 3rd, 4th generation families that want to stay in the region, but they want job opportunities. And so projects like ours are going to be able to continue to create that opportunity, and we feel blessed to be able to pick up on some of these other projects that have gone before us and give people new opportunities in the same region. Just a quick overview of the site itself. Nothing overly complicated about that. The pits that you see in the middle there in yellow are about 3 kilometres of strike extent. The mineralisation runs through there. It's quite vertical, sub-vertical. We've hit mineralisation as close as 5 metres from surface, and we've hit it down at 1,000 metres deep. So we know that we've got a very big mineralised system here. And as I said, it's a very traditional flotation circuit, nothing overly complicated about the plant that we're looking to build. So I'll touch on some of these other points as we go through. Licensing, scale, the costs, and where we sit, the overall economics and what it means relative to our equity value. We did talk about the licensing briefly before, but we have now got the preliminary licence, which was the approval of the environmental impact assessment. We've now been granted the installation licence, which allows us to build the plant on site. We've got that same LP and LI for the power line route to take the connection that will come off the grid to our site, and we've got the mining lease granted. So all the permitting is in place for Jaguar to be built. The scale of the project, it's very, very large. It's been well drilled. In 2022, we had 15 drill rigs working out here. That resource now sits at 1.2 million tonnes contained nickel metal. Of that, there's about 1 million tonnes that is sitting in the measured and indicated category. It has got the size and scale, and it does compare pretty comfortably with some of the best nickel sulfide belts globally. The only deposit, I think, in the world that's got a better deposit as such is Kabanga in Tanzania. But I would back Brazil every day of the week over going to Tanzania as a project location rather. Of that resource, we've converted 400,000 tonnes to reserves just from the open pit mineralisation. It'll be a very traditional open pit mine. We'll have a fleet of trucks from a mining contractor running around there. There's a number of those mining contractors in Brazil, and Tiago and his team are working to get that contract in place in the near term. The process flow sheet itself, again, very simple flotation circuit. 3.5 million tonnes a year of throughput, which will produce a very high-grade concentrate. So we'll produce a nickel concentrate that runs about 30%. That doesn't really exist anywhere else in the globe right now, and that's because the nickel sulfide that we deal with at Jaguar is what they call a millerite. And most deposits globally are pentlandite, and it just means that the tenor of nickel in that sulfide species is much higher in millerite, around 62 or 63%. So once we suppress all of the other sulfides, we let the nickel float to surface and scrape that off and filter it, we end up with this very high-grade concentrate. So the last time you saw a concentrate of that grade is probably in Western Australia at Mount Keith about 25 years ago, when they were producing material that was millerite rich. What that means is good logistics costs. We only have to move 65 to 70,000 tonnes of concentrate around the globe to get 20-odd thousand tonnes of nickel to market. As I touched on before, about a third of that production currently planned to come out of here will go to Glencore at their Sudbury operations in Canada, and we're now working on the balance of that offtake and hopefully not too far away from culminating further offtake transactions. That cost curve is important. We had to show to the off-takers that we would be cost competitive at all points in the cycle. Being down the bottom there at around $4.40 per pound of nickel on a payable basis makes us competitive, particularly with all the laterite producers in Indonesia, which is dominating the market. So we will be there at every point in the cycle. We're very confident around that. Sorry, jumped ahead too far. And that straight line there is really our cost relative to where nickel's been over the last 20 years. So we feel very confident that we will make significant dollars over the long term because of where we are on the cost curve. Quickly running out of time here, but we've got a 15-year project at the moment based on the open pit mineralisation. You can sort of see the first 7 or 8 years there runs at around 22,500 tonnes of nickel in that bottom bar chart. There's a drop away there around year 8, year 9 to about 17,000 tonnes of nickel, and that's where we think that we will bring in the underground from the project. So those are those same pits, about 3 kilometres of strike on the left. You can sort of see the mineralisation goes down below the pits. We've done some internal work. It looks like you could potentially pull another 200,000 tonnes of metal out from the underground. But that will be something that we will explore further as we get into the project and we're starting to generate cash flow. We've repaid the debt, et cetera, et cetera. And the cash flows. So those cash flows from producing around 22,500 tonnes of nickel at our price assumption of long-term price of $9 a pound gives us about $170 million free cash flow per year. If you run that at today's prices, you're probably talking around about $120 million per year over 15 years. But as I would reiterate, we expect that this project will continue on much beyond this 15-year project life. The debt funding process is well entrained. We're going through that process. We've got extremely good term sheets in front of us. The ITs have been appointed, they've done their work. We're now looking to shortlist that, get to credit-approved term sheets by mid to late September, which puts us in a position then to be able to close out the equity and then make investment decision. If anyone wants to talk a bit more about that funding strategy, we can do that at the booth. But yeah, the offtake from Glencore has been important. The second offtake, third offtake that we do for the product, which shouldn't be too far away, will just help underwrite everything that we've got from the debt funding pathway. Should be a 2-year build. We're doing a lot of work now. All the pre-development type activities are well underway. Tiago and his team are extremely busy building that out, getting the work ready to go so that once we make investment decision, we can mobilise everyone to site quite quickly. I won't talk to Boy Novo today, running out of time. We'll keep it on track. But if you want to talk about the copper, which is also in the Carajás Mineral Province, please come and see us at the booth. Thank you very much for your time.